Hello, traders. Good morning. This is a boy Dynamic Trader, wherever you're watching from, and I hope my videos are very self-explanatory, and hope you're getting one or two from it. Quickly, let me uh, quickly explain or buttress what I said the other time. My class explained SMC strategy, and I said two things makes up the SMC strategy, which is market structure and liquidity. Okay. And I said when the market is moving to the upside, it has to be creating series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. All right. So if the market is making higher highs and higher lows, then all you should be looking out for is buying opportunity. When the market has made swing high and a swing low, then this current swing low breaks above the swing high created, then you should be looking forward buying opportunities. And what is liquidity? Liquidity is all over the market, but liquidity can be seen as double tops, all right, double bottom. So for the markets to be very authentic, then when the market has broken structures, you also break up market structure, you mark out the last bearish candle that was formed before the impulsive move to the upside. Then also observe liquidity. All right, the market should create something like this, not necessarily double bottom, but it can be trendline liquidity. Then tap into your point of interest or your demand zone. Then you take it to the upside. All right. So having said that, I want to quickly make the example using this Gbpnzd trade. So now you can see liquidity, which is double top. All right, we're trading towards that double top, and this is on the 2-hour time frame. So if I frame this particular place, you can see that the market tapped here, right? Resistance. So resistance areas can be seen as liquidity areas. So and the market presently has been over time has been presenting us with bullish trend. You can see even if I use trend line to join this point to this point, you can clearly see that the market has made this first touch. This is not a proper touch. This is a second touch. So the market is bullish. That is what it's clearly saying. And if I can change it clearly to this line charts for us to have a uh, clean trend line, which is this. Joining those points together is point 1 and point 2. So bringing it back to this point, you can see that in the candle side, the market also tapped here, and this is a third touch. Okay, so it's actually bullish, and the market has been doing what again? To confirm, it has been doing what? Higher high, higher low, higher high. So I'm expecting a higher low to continue to the upside and taking out this previous high that was created. All right. So this is top-down analysis that I'm doing quickly. Sorry that I'm rushing the class. So, but being that I've spotted out this very place, which is a liquidity area, turning into candle as into line chart here this way. So this is double top. So I'm trading towards that line. All right, trading towards that line. And if I change this to daily, let's see what is happening on daily. You can see on daily, that was also a high that was created for this move to the downside. So I want to see that the market taps back into that place. So coming back to the 2-hour time frame or even 1-hour time frame, I've been able to see that, okay, the market has done this. It's created a swing high and a swing low, just as illustrated, which is this swing high, swing low. Then this impulsive move to the outside broke structure. All right. So this is a trade that is yet to play out. So you put an eye on this particular pair, Gbpnzd. So mark out this swing high created and label it break of market structure. BMS. All right. BMS. Excuse me. This. So BMS. What's happening? Why is it not coming up? Is it network? Oh, sorry. You can't do the okay. All right. That's the BMS. So we have two ways of approach. I said you mark out the last bearish candle that was formed before the bullish movement. So if you're marking out the last bearish candle, which is this, so let me zoom in for those that might complain that they're not seeing. So I said you mark out the last bearish candle, which is this. So marking out the last bearish candle, it means that we're going to enter off this, but from this point, but you can see there is also another red candle there. So, but to cut the long story short and to eliminate some other things, then what you can simply do is I can use my Fibonacci to mark from this low to this high. All right. So if I'm marking from the low to this high, my Fibonacci gives me an entry from this point. But the Fibonacci is not just, it's just for measurement, all right? It's just for measurement. So, but I love using my Fibonacci because it's very precise, all right? It's very precise. So it just frames my chart for me. So it gives me, I don't have to miss some entries, all right? So using my Fibonacci tool, then this is what I will do. My entry will be here at that point. So my stop loss will just be at that swing low created. So I don't have to stress and I don't have to miss trade. All right. So this is on the 2 hour time frame. And where is the place I said we want to take profit here? All right, which is that's equal high above. It's as simple as that. So this is my analysis for Gbpnzd for this week. So I want to see that the market does what? And I said liquidity. We can clearly see trend line liquidity forming. All right, so this is trend line. You can see this is market touched here, bounced up, touched, bounced. So we want to see that the market did this. The market clears out liquidity. Those that are buying early buyers, then take us to the upside. All right. So this is what I see on Gbpnzd, and you applying the same method, it will give you an edge in the market. Why? Because you'll be able to spot out liquidity above, then trendline liquidity, which is acting. This one is acting presently as inducement. All right, it's acting up as inducement. Okay, so we want to see that the market returns to this point. Then we take the buy up. And look at what happened here at the same time. The market swept liquidity. It swept those that are trying to buy. All right. Okay. So it's called liquidity raid. But I'm going to explain that in the next class or anytime I remember. So this is what I clearly see on Gbpnzd. And if you have any question as regards to my analysis, please do well to drop a question in the comment section, and be sure that we attend to all questions asked. All right. So see you on the next one. Bye bye.